Good morning, everyone, and thank you very much for joining me. This is the morning market review. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. And of course, if anybody needs to contact me, that's the email address to use. I shall bring up the disclaimer, starting off with our high-risk investment warning. I'll keep this on screen for a few moments. Hey Mia, good morning to you. Nice to have you on the webinar as always. Thank you for all of you that have signed in. And I'll just keep this high risk investment warning on for just another few seconds. And here is our market commentaries disclaimer. Okay, and just finally our references, Market Scope and Trading Viewer. We'll do quite a bit of work on Trading View. We'll go just till the top of the hour, then we'll switch webinars. We'll do the Crypto Minute. And tomorrow we've got the Bank of England rate decision. I want to show you what they are dealing with. This is the UK's inflation rate year on year. It's not the core. It's actually the headline, and the reason I'm showing the headline, I went to the BOE's website yesterday, and it looks as if they are targeting 2% on a headline basis. I was quite surprised because the headline is a lot more volatile than core. Now you can see how far from target they are. Current headline inflation is 10.1%, right? And target is down here at 2%. Let's just put the target in. So there's a lot of daylight between where it is and where they want to get it to. Let's just make this red. All right, and the bottom chart here is the rate of change. Effectively, we're measuring acceleration, deceleration of the inflation rate, because the inflation rate is effectively a rate of change. So we're taking a rate of change of a rate of change. So it's effectively looking at acceleration, deceleration. And what needs to happen is this line here has to actually fall below zero. Okay, if it stays above zero, we'll never get to that 2%. It has to decelerate. Deceleration is below zero. What's happening now is we're accelerating at a declining rate. Okay, so the acceleration has slowed down, but it's still accelerating. Okay, so we still need to get below zero here. And let me take this label out here. I don't think we need that. It's just so the very least we'll get tomorrow, in my opinion, is a 25 basis point increase. That's what is forecast. The Bank of England officials have kind of played down rate increases, but I think that by September we should be up to 4.75. It really is important for this acceleration to fall to deceleration, and there is a considerable lag between where the UK is compared to other OECD countries. For example, let's bring up the US here. Okay, so I'll just, what we can do is let's bring up here core PCE. Let's not make it core. Let's make it United States inflation. Okay. And let's put in the rate of change there. Okay, so we're looking at the acceleration, deceleration. and they're on the deceleration side. Okay, they're on the deceleration side. So there is a gap, and the idea here is you've got to get to the side of the indicator to start controlling inflation. So the Bank of England's in an unenviable position at the moment. Is there an equivalent to Fed market expectations? Yeah, there is. There are. I need to find them, Gurdeep. But I am of the opinion that the expectations are 4.75 by September. I'll need to find the data itself, but there would be a futures contract that would suggest. I'm actually concerned that there might be some sort of surprise tomorrow, a 50 basis point hike. Now, that would be a surprise to the upside, but it's just that there is such a big lag with the UK's fight against inflation. There must be a concern there for the Bank of England. What does that mean? Okay, so we've taken a look at this. What does it mean for us as traders? Well, let's take a look at the 2-year so the 2-year gilt and the 2-year note, the US 2-year note. Okay. Oh, what is wrong here? Here we go. That should. All right, that's better. All right, and let's take a look what we have. Let's take a look what we have here. Put in a trough. So you can see that the spread is increasing in favor of the gilt. Let's put in a peak. Put in a higher trough here. Put in a higher peak. And let's put the cable pair underneath that. And you can see the upward trend of cable. So as the 2-year the 2-year spread gets that uptrend, higher trough, higher peak, so cable is responding positively to that. Why are we looking at the 2-year yields? Is because the short-term borrowing costs react very quickly to changes in monetary policy, especially on a relative basis. So we can see that there is a fundamental case to be made for strength in pound US dollar. So I want to show you this chart over here. This chart over here is the weekly chart. We've got our zones of pound to the US dollar. This is the RSI. This black line here is the RSI. The red line here is our Bollinger Band width. So let's just take a look where the width narrows, and it narrows and then expands over here. I want to change this to red. It narrows and expands over here. Narrows and expands over here. Narrows and expands over here. This one I'm going to make green because this is the squeeze that's just resolved. Okay. Now, if you take a look at the previous three, there are common signals here. Let's take a look at the common signals. You've got the, let's make this red. You've got the cable pairing hugging zone 3, that's the lower blue, lower red. You've got the RSI below 50. Similarly here, it's on the bearish side of 50. A little bit of a whipsaw there, then hug it down there. And you can see that it is the RSI is on the bearish side of 50. Okay, that's not the case with the current resolution. The current resolution has got cable in the bullish side. I want to change this to green, just to, you can see here's the difference. We're in zone 1, upper blue, upper red. What about the RSI? Nicely above 50. So the squeeze is there, but the positioning is bullish, and it's bullish when we've got the 2-year spread showing higher trough, higher peak. Well, that shows the relative hawkishness of the Bank of England over the Fed. Well, that makes sense because we saw how far behind the UK is in terms of its fight against inflation than, say, the US side. So pound US dollar looking very strong at the moment. Right now, we've just had a resolution of a squeeze starting to expand. So this is one I think to keep on the watch list. Let's take a look at this a little bit closer. So we're going to go through to market scope now. Kobus, I'm still waiting for some sort of resolution on what this error message is. As soon as I get some news there, I'll let you know. Sorry, this is taking a bit long. Let's just go through to trading view. We'll go into the 1 hour here. Okay. Let's change the indicators as follows. Let's put in some moving averages here. So go indicators, we'll make them exponential. We'll make them a 5 and a 10. Okay, so go, yeah. Let's just change these up. The 5 I'll make green. Make this 5. And the 10 I'll make orange. Right, and then let's take the RSI out. Let's put a stochastic in. Put in a slow stochastic. We'll keep it 15.5. Okay. Let's put in %D. So what would be interesting here is if we get a positive cross to the upside. It does look as if it's hinging upwards. Okay, it does look as if it's hinging upwards. Let's just see if this has sorted itself out. It's easier to see on this. Yeah, there we go. So here you can see we're starting to get the movement up here. Okay, just need some angle and separation. And then what's happened is we reached the upper quintile, we've fallen out of it. We need to get some sort of bullish movement here. And once we get some bullish movement there, okay, we need to go back into the upper quintile and hold. So this is very interesting. This is very interesting in terms of the Bank of England policy meeting tomorrow. Okay, so we got to be, I think, quite savvy. Keep the cable pairing on our watch list. On a longer term view and on a fundamental view, it's looking very interesting indeed. On a shorter term view, okay, just want to see if the EMA's developed that angle and separation to the upside, and if the stochastic makes it through to that upper quintile and holds. Okay, so that's what I wanted to show you this morning. What we'll do is we'll conclude at this point, and we will go through to our second webinar, which is going to be the Crypto Minute. Please join me for that. Thank you very much, guys.